Κυρίες και κύριοι, καλημέρα σας. Είμαστε μαζί με την κυρία Markusen, επικεφαλής της ανάλυσης και στρατηγικής της Societe Generale Asset Management, και θα μιλήσουμε γύρω από την κατάσταση που επικρατεί στις αγορές εν μέσω του περιβάλλοντος κρίσης όλων των τελευταίων μηνών, καθώς και για τις προβλέψεις της γύρω από βασικά οικονομικά μεγέθη και προϊόντα των αγορών. Mrs. Markusen, good morning. Nice to having you here with us. The first question is what's going on all these days in the markets? We have an environment full of a crisis environment. When we will see the next day, and if it is possible and easy these days to predict when there will be the next day and how it will come?
Well, it's clear that when we look at the financial crisis today, things took a decidedly bad turn in the middle of September. At this time we had systemic risks, and since then what we've been seeing that the governments have been coming in, they've been stepping in with very important measures, and now it's a question of confidence. It's a question of rebuilding the confidence in the markets that these measures will actually work. This is the first step that we have to go through, and I think a lot of that is being established in these days. We see that the markets are very volatile, but we seem to have established some low points at these levels. The problem is that now we're facing a recession in all the major economies, and this is the next thing that the markets have to digest. The next question we're asking, how long will the recession last? Just how bad will it get? This is what the markets are focusing on today.
And do you have an answer to this question?
Well, again, it comes back to the financial markets, because then it comes back to the question of confidence, the dynamics between the markets and the real economy. But my answer to the question is that I believe that the recession will probably run for about 3 to 4 quarters. And then beyond that, what we're probably going to see is a period of very weak economic growth. We have to remember that we're going through a very important deleveraging process. So I think growth will be flat in the major economies in 2009, and what we'll probably see is very weak growth in 2010, below trend potential. So it's going to be quite a while before we can say that we're out of the crisis. But as we look at markets, what's important to keep in mind is that markets are pricing two things. One thing is an economic slowdown, the recession. The other thing is a risk premium for all of the really bad things that could happen, i.e. a depression scenario. And I think that over time what we'll see that risk premium becoming less and less and less. But it will be a progressive move, and it will be volatile.
You talked about the measures taken by the governments, and yesterday Mr. Sarkozy proposed the creation of a European economic government. Do you think it is possible, in the end of the day, all the governments of the countries members of the Eurozone to reach to a coordination, to a cooperation towards the crisis? Because we've seen too many different views and opinions on the solutions of the problem.
I think the good news is that in the beginning of the crisis, indeed, we saw a very fragmented approach within Europe. Then we came together in Europe, we saw that there was a common framework adapted, and then each country has been adapting its own national solutions. And I think this is where we're going to be today. We can have some common frameworks. It's probably going to be difficult to have a one-size-fits-all policy within Europe today. What I think is very encouraging with the current situation in Europe is we did see the governments come together to decide a common framework. And I think if we look at the regulatory environment, we have a very good opportunity now to harmonize things across Europe and create a single regulatory framework. If something like this could be achieved, that would be a very positive thing to come out of this crisis.
Talking about stock markets, we've seen a great volatility all these days, and intraday volatility. How long will this last, do you think? And I'm talking about the US, the Asian, the European markets, and the second part of the question is about the Greek stock market, where we've seen a total sell-off in the bank sector in the last days.
I think if we look across the global financial markets today, it's clear that the volatility, as you say, is very, very high. Now, predicting exactly when that volatility is going to end is going to be a very difficult thing to do, and not one that I'll pretend that I'm able to forecast for you. What I will say is the following. What we need to watch is we need to watch the tension in the interbank markets as a guide to help us understand what's going to happen in the rest of the system. And the good news here is that we have seen that tension being gradually reduced. It's very gradual, and it's going to continue to happen over the coming days, in my opinion, coming weeks. And I think as we get towards the end of this year, we should hopefully see some easing in the tension, but it will be a long process. The markets will be worried about the underlying economies now, so I don't think we should expect a quick fix, and we shouldn't expect to see a return to the kind of financial markets that we saw prior to the crisis, at least not in the short term. Now, focusing specifically on the Greek market, it's clear that the Greek equity market has a heavy concentration on financial stocks. And when there are concerns about this sector, it's something that weighs very heavily on the Greek market. So this is a key factor, especially for this market. How quickly will confidence return to the financial stocks? When we look at valuations today, valuations are very, very depressed in this sector. But I think it will take time for that confidence to come back.
Talking about the interest rates, we had the movement from all the central banks of the world that they reduced their basic interest rates. Talking about the European rates, the decision of the ECB, do you think that it has already started a cycle of reducing the interest rates in Europe, or ECB will remain focused on the inflation?
Yes to both questions, because if we're looking at the situation we're in today, we are facing a severe economic slowdown. A recession lies ahead of us. And in such a scenario, the concern is not to see inflation, because basically as the economy develops more and more slack, unemployment will go up. There will not be inflationary pressures inside the Eurozone. So this will allow the ECB, without giving up its objective of price stability, to actually cut rates quite aggressively. And I think we could easily see the ECB cutting rates to 2.5%, maybe even as low as 2%. But again, it comes back to how quickly confidence is coming back to the markets, just how aggressively the ECB will react on rate cuts. But I believe they can and will cut rates, yes.
So 2 or 2.5 during 2009?
Yes, that's right, yes.
And what's your point of view about Euribor and LIBOR and all these rates? Because too many loans, too many house loans, especially here in Greece, their rate is dependent on Euribor, and there are too many people that are very worried about the cost of this money.
Well, the good news is that what we've seen in recent days is that we have seen tension coming down on the Euribor, on the LIBOR rates, and this is linked very much to the measures that the governments have put in place, addressing both the funding side, but also help with the measures from the central bank addressing the liquidity side. So we have seen an improvement coming through, but I agree with you, it's a slow improvement, and it's painful for people who have loans indexed on these rates. So what we need to see is for those rates to continue to come down. Now, it's clear that if the ECB is cutting rates and Euribor is staying the same, the impact on the real economy is not very important. What we need to see is both the rate coming down, the ECB rate coming down, and Euribor coming down. And I think this is going to happen, but again, it's going to be this slow process of confidence gradually coming back. But you know, if you look over the past couple of weeks, it has actually been quite encouraging in terms of what we've seen on the money market. So I expect to see this to continue.
We will also continue to see the euro depreciating towards dollar.
Now, I think from a sort of medium point of view, I actually expect the euro dollar to be fairly flat, maybe a little bit different from where we are today. Say, let's expect the euro dollar in 12 months' time to be around 130, 135. I think that's a fair forecast. The difficulty is that what's going on in foreign exchange markets today is not only being driven by the fundamentals, it's also being driven very much by different deleveraging processes, and this is especially true for the Japanese yen. So as we look at the currency markets, again, be careful. It's going to be very, very, very volatile. And indeed, we could easily see the euro-dollar coming down significantly and then coming up quite significantly as well. So it's going to be a very volatile situation.
Mm-hmm. When we have a crisis, sometimes there are some good news, like the fall of the oil prices. What's your estimations about oil prices in 2009?
Well, I think oil prices will continue to mirror what's going on in the underlying economy. And it's clear, it's good news because it does bring relief to us. But what's clear is that the oil price today is also depressed relative to what we consider its fair value. Fair value on oil today is probably between $80 and $100 per barrel. So as we see confidence coming back that it's only a recession and not a depression scenario, we are going to see action from OPEC as well. I would expect to see some increase in oil prices towards the end of 2009. I would expect us to be back around $90 per barrel.
And my last question is about investments, because too many people, the majority of the people all over the world are very worried about their money and they don't know which is the best way to handle their money and where they should invest. There are always opportunities in a crisis environment, but in your opinion, which are these opportunities?
I think it's very important when we talk about investments to remember that any investment decision must always be tailored to the individual person that you have in front of you. So it's difficult to say this is the thing to do, and that would be the worst thing to do, to say okay, now let's put all the money in one thing. So I think two things are key in this context: diversification and the horizon that you have. If you have a 5-year horizon, I think that equity markets, it's probably an attractive entry point, but you have to be able to buy and hold and have to have the tolerance for the volatility that we talked about. I think credit markets offer a lot of opportunity as well. Valuations there are also depressed, but again, you have to look at what it is you are investing in and whether you have the tolerance for the volatility that will come with any risk product today. So it's about thinking about your portfolio. What is it that you want to do? And perhaps one thing to think about for the long term is what's going to happen on inflation. So I would also think that inflation-linked bonds could be an interesting opportunity to look at closely today.
You think that inflation will drop in 2009?
I think inflation from a cyclical point of view will probably be low in 2009, but from a structural point of view, we must remember that everything that's happening today is a much more inflationary world ahead. We've seen the end of the ultra-cheap inputs, and what the governments are doing today, it's all reflationary policy. So as we come out of this crisis, I would expect inflation to be picking up.
Thank you for being with us.
Thank you very much.